Hi there and welcome. We're a pro-tax accountant, and here at PTA, our whole mission is to help UK businesses get to grips with the, let's face it, pretty complex world of tax. You know, one of the most powerful tools that we talk about with our clients, and one that always brings up a ton of questions, is the Enterprise Management Incentive Scheme, or EMI for short. It is an absolute game changer for attracting top talent, and in this explainer, we are going to break down exactly how it works and what it could do for your business. Right, this is the big question, isn't it? If you're running an innovative UK business, you've got the vision, you've got the culture, but you're going head-to-head with these corporate giants who can throw around salary packages that are, well, they're just out of reach. It's that classic talent incentive challenge. So how on earth do you even begin to compete for the best people you need to grow? Well, the brilliant news is there is an answer. And it's one that was specifically designed to level that playing field. Now, this isn't some dodgy loophole. It's a powerful strategic tool, fully backed by the UK government, that lets smaller, high-growth companies offer something incredibly compelling, a real, tangible stake in the company's future success. Okay, so here's what we're going to cover. First, we'll dig a bit deeper into that talent challenge. Then, we'll get into exactly why EMI is called the gold standard of share schemes. After that, we'll look at the really exciting bit, the brand new rules on who's eligible, which are opening this up to so many more businesses. Then we'll walk you through the practical setup, highlight the big mistakes you need to avoid, and finally, we'll cover your next steps. So let's be real about this challenge. As a startup or a scale-up, cash is absolutely king, right? Every single pound is fighting for its life, going into growth, R&D, you name it. Trying to compete on salary alone is, frankly, a battle you're probably not going to win. And that is precisely where equity becomes your secret weapon. Because it's not just about money down the line, it completely changes the dynamic. It turns your employees into owners, tying their own personal success directly to the success of the company. And this right here is the UK government's #1 tool to help you do it. Let's be crystal clear, an EMI scheme isn't just any old share plan. It's a purpose-built, incredibly favorable, tax-advantage framework created specifically to give ambitious, smaller companies a real competitive edge in finding, motivating, and most importantly, keeping the key people who are going to drive that success. You'll hear people call EMI the gold standard of share schemes all the time. And honestly, it is not an exaggeration. It all comes down to the unbelievable tax efficiency, not just for your employees, but for the company too. The financial perks are so good that when you lay it all out, it makes a simple cash bonus look like a pretty second-rate offer. And this slide just shows it so clearly, doesn't it? Just look at the absolute hammering £100,000 cash bonus takes. I mean, a massive chunk of that, nearly half in some cases, is gone straight away to income tax and national insurance. Now look over at the gain from EMI shares. The tax is tiny in comparison. That difference, that's not just a number on a chart. That is real money in your employee's pocket. It can be life-changing stuff. So, here's the magic behind it all. If the EMI scheme is set up properly, there's no income tax or national insurance when the options are granted, or even when they're used to buy the shares. Tax only comes into play when the employee actually sells those shares. And here's the best part, it's taxed as a capital gain. Plus, if they've held the shares for at least 2 years, they can often qualify for what's called business asset disposal relief. This brings the tax rate down to just 10% on the first £1 million of gains. Compare that to income tax rates of over 40%. You can see the power. But here's the thing, it's not a one-way street. This is what makes it a true win-win. It isn't just your employees who get the benefit. When an employee exercises their options, your company gets a corporation tax deduction that's equal to the employee's gain. Just think about that for a second. If an employee's shares have gone up in value by £100,000, your company can knock £100,000 off its profits, slashing its own tax bill. When you get to a big company exit, that can mean millions of pounds in tax relief. Right, let's talk about something really exciting, the new rules. You know, one of the big frustrations with EMI in the past was that really successful, fast-growing companies could actually outgrow the scheme's limits and lose access to it. But there are major reforms coming into force from April 2026 that are completely changing the game. They're opening up this amazing scheme to a much wider and much larger range of businesses. And this table just lays it all out. And the numbers, well, they really do speak for themselves. I mean, look at the scale of this. The gross asset limit quadruples from 30 million up to a massive £120 million. The employee limit doubles to 500. The total value of options you can have on the table at any one time doubles to 6 million. Even the lifespan of the options gets a boost to 15 years. This isn't just a little tweak, it is a huge, huge expansion. And this quote just nails the impact, really. The government is sending a crystal clear signal here. They want to make sure that as companies scale up and become more successful, they don't lose access to their most powerful tool for rewarding the very people who are driving that growth. What this means in practice is that EMI is no longer just a perk for startups. It's now a serious, long-term strategic asset for established, rapidly scaling businesses. Now, of course, some of the core rules are staying put, just to make sure the scheme is used as intended. Your company has to be independent, so not a subsidiary, and it can't be in certain trades like banking or property development. For employees, they need to work at least 25 hours a week or have it be 75% of their total working time. And they can't already own more than 30% of the company. The individual limit per person also stays at a very generous £250,000 worth of options. And the scale of this impact is genuinely massive. We're not talking about minor changes for a few companies here. The government expects these reforms will bring EMI to nearly 2,000 more of the UK's top high-growth companies, and that means they'll be able to reward an estimated 70,000 more employees with a real slice of the action. This is a huge, deliberate boost for the entire UK scale-up economy. Okay, so you've heard all this and you're thinking, right, this sounds exactly like what my business needs. So what next? How do you actually get one up and running? Now, I know the process might seem a bit daunting. You've got legal docs, HMRC, but it actually follows a very clear, very logical path. So let's break down the practical steps. It really all boils down to these 5 key stages. 1. First and foremost, check that your company and your key employees actually meet all the criteria. 2. You design the rules of your scheme. This is the fun bit, where you decide how people earn their shares over time, that's called vesting, and what happens if someone leaves. 3, and this is so important, get a share valuation agreed with HMRC. 4, you formally grant the options with proper legal agreements. And finally, 5, you tell HMRC about it, on time. Okay, here is a professional tip. And honestly, if you take one thing away about the setup process, make it this. Getting that share valuation agreed with HMRC before you grant a single option is an absolute must. It gives you and your employees total certainty on the tax position right from day one. There are no nasty surprises waiting down the road. Once HMRC agrees to it, that valuation is locked in and valid for 90 days, giving you a clear window to get everything sorted. Right, so setting up the scheme correctly is one thing, but making sure it stays tax-advantaged for years to come, that's another. There are a few common tripwires and so-called disqualifying events that can catch you out and potentially undo all those incredible benefits. So it's absolutely vital you're aware of these right from the start. The first and by far the most common pitfall is that notification deadline. For any options you grant in a tax year, which runs April to April, you absolutely have to notify HMRC by the 6th of July of the following year. Miss that deadline and it can be a disaster. You could lose all the favourable tax treatment for those grants. The good news is, this whole separate notification faff is set to be scrapped from April 2027, which will make life much simpler. But until then, that date is critical. And here's another really common one, an employee leaving the business. So what happens then? Well, it's crucial that both you and your employee know the rules. A departing employee has a 90-day window from their very last day to exercise any vested options and keep that amazing EMI tax treatment. If they wait any longer, that gain could flip from being taxed at that lovely low 10% capital gains rate to being hit with income tax at over 40%. The difference is absolutely enormous. So let's just boil all of that down. What are the key takeaways? First, EMI is, hands down, the UK's best and most tax-efficient share scheme for growing businesses. Second, it is an incredibly powerful tool for winning that war for talent. Third, those 2026 rule changes are a genuine game changer, making it available to more and bigger businesses. And finally, please remember, getting the setup and the ongoing compliance right is absolutely critical to protect all those benefits. And of course, we do have to do the official bit. This information has been for general guidance and educational purposes only. The rules around EMI are complex and every single company's situation is different, so it is vital that you seek professional, tailored advice based on your specific circumstances before you take any action. So, if this has got you thinking and you're wondering how this could be applied to your business, then the next step is to have a proper chat. Let's explore how an EMI scheme could be structured to fuel your company's specific growth plans. And that is exactly where we can help. We can help you navigate every single step of this process, from checking if you're eligible and getting that valuation, right through to granting the options and managing the compliance. To start that conversation, please do get in touch with us at Pro Tax Accountant. All our details are right there on the screen. And for more straightforward guides like this on complex tax topics, please make sure you subscribe to our channel. Thanks so much for your time today.